everyone, welcome back to the Mortgage Reports. Today we're tackling a question we hear more and more often. What happens if you're planning to retire abroad and you either have or are considering a reverse mortgage? Well, with more retirees looking at living overseas for lower costs, adventure, or family reasons, it's important to understand how a reverse mortgage fits into that plan and when it might not fit at all. In this video, we'll break down how reverse mortgages work if you leave the country, what the rules are around occupancy, and when moving abroad can create problems, and how some homeowners still use their home equity strategically while living overseas. So let's dive in. Question 1. Can you have a reverse mortgage if you plan to retire abroad? Well, short answer is yes, but with important limitations. Reverse mortgages are designed for homeowners who live in their home as a primary residence. That means you're required to occupy the property for the majority of the year. So if you permanently move abroad, the home no longer qualifies as your primary residence, which can trigger loan repayment. However, short-term or temporary travel overseas is generally allowed, as long as you continue to meet occupancy requirements. The key difference is whether you're traveling or truly relocating. Question 2. What are the occupancy rules for a reverse mortgage? To keep a reverse mortgage in good standing, you must live in the home as your primary residence, pay property taxes, maintain homeowners insurance, and keep the home in reasonable condition. Extended absences can become an issue. Now, if you're away from the home for more than 6 consecutive months for non-medical reasons, the lender may consider the property no longer owner-occupied. Medical-related absences may be allowed for longer periods, but documentation is typically required to support that. And if the home is no longer considered your primary residence, the loan becomes due and payable. So question 3, what happens to a reverse mortgage if you permanently move overseas? Well, if you permanently relocate abroad, the reverse mortgage usually must be repaid. Now, this doesn't mean you automatically lose the home, but it does mean the loan can no longer remain under a reverse mortgage rules. At that point, homeowners or their heirs typically have options. Now, selling the home to repay the loan is one, paying off the balance with other funds, or refinancing into a different type of mortgage if it's eligible. So understanding this ahead of time is critical so you're not caught off guard by repayment requirements. Question 4. Can you rent out your home and live abroad with a reverse mortgage? Generally not. Renting out the home while living abroad would violate the primary residence requirement of a reverse mortgage. Now, these loans are not intended for investment properties or rental income. So once the borrower no longer occupies the home, the loan is typically considered in default. That said, renting part of the home while still living there, like having a roommate, may be allowed in some cases. The distinction is whether the home remains your place of residence. Question 5. Are there ways a reverse mortgage can still support retiring abroad? In some cases, yes, but it requires careful planning. So some homeowners use a reverse mortgage before moving abroad to access equity while they're still living in the home. This might mean taking a lump sum or setting up a line of credit while they qualify, then selling the home later to repay the loan once they officially relocate. Now, others use reverse mortgage funds to pay off existing debt, build savings, or fund a transition period that includes international travel. The key is timing. Once the home is no longer your primary residence, the reverse mortgage can't remain in place. Question 6. When does a reverse mortgage not make sense for someone retiring abroad? Well, a reverse mortgage may not be a good fit if you plan to move permanently overseas in the near future, especially if you don't intend to keep the home as your primary residence. The upfront costs may not be worth it if the loan will be repaid shortly after. It may also not make sense if your goal is to keep the home as a long-term rental or investment property. In those cases, Other financial strategies, such as selling the home outright or exploring different financing options, may be more appropriate. So here are some real life examples. First example, Maria planned to spend several months each year in Portugal, but wanted to keep her US home as her main base. She used a reverse mortgage line of credit to supplement her retirement income while still meeting occupancy requirements. Now, because she continued to live in the home most of the year, the reverse mortgage worked well alongside her travel plans. Example 2, David and Susan planned to permanently move to Mexico within 2 years. They considered a reverse mortgage, but ultimately decided against it after realizing the loan would become due once they relocated. So instead, they sold their home, used the equity to fund their move, and avoided paying reverse mortgage fees they wouldn't benefit from long term. Planning to retire abroad can be an exciting chapter, but it's important to understand how your home and your mortgage fit into that plan. So to recap, reverse mortgages require the home to be your primary residence. Temporary travel abroad is usually allowed. Permanent relocation is not. Renting out the home while living overseas generally isn't permitted. In some cases, a reverse mortgage can still be used strategically before moving. But if you plan to permanently relocate soon, a reverse mortgage may not be the right tool. Now, if this video helped clarify how reverse mortgages work when retiring abroad, give it a thumbs up, subscribe to the Mortgage Reports, and hit that notification bell so you don't miss future videos that break down complex housing topics in simple, real-world language. And for more guidance and examples, check out the full article linked in the description. Thanks so much for watching, and I'll see you in the next one.